Hello, everyone. John here. Just thought I'm a little late with this year because I wanted to wait for two reasons. One, obviously, well, the World Cup has just begun, and you can see where my heart is. Well, this time 4 years ago, we had three people from Brazil working with us. Now we have six, so I have no choice. So my heart says Brazil. My money says Spain. You heard this here first. But anyway, I hope for anyone who's interested in soccer that you don't spend too much time working or watching it. They're on very, very late, so I hope to see some, but probably not all. Anyway, the reason I held off doing this sooner was I was waiting on the announcement from the European Central Bank on Thursday, as predicted, and as I mentioned last month, the interest rates did go up. The European Central Bank upped the rates by 0.25%. So what does that actually mean? Okay, well, it means in real terms for anyone who's, and this is for people who have their current mortgage, if anyone's on a fixed rate currently, it means nothing at this moment in time. If anyone's on a variable rate at the moment, it doesn't mean anything at this moment in time until the banks might do something with it, as in they increase their own rates. If you're on a tracker, that will have an impact pretty much immediately. Okay, so for those on a variable rate and for those who are due to come off fixed rates, this is the people who need to start thinking, right? It's not always a case of the European Central Bank increase its rates and the banks automatically put it up. After COVID, the rates went up by 4% in a very short period of time. The banks only, I don't mean only, but their rates went up by two and a quarter in that time frame and on a staggered basis. So it may well be kind of watch this space, which bank will move first. The pillar banks pretty much will kind of want to protect their market share, and they'll all be watching what each other one does. The sort of the less traditional banks, shall we say, will probably, some of them actually had moved pre the rate going up because their rates are more tied to the Euribor rate, which fluctuates on a much more frequent basis than the European Central Bank. But for the European Central, the ECB rate is the key driver here. What are the expectations? Well, there still is an expectation of another increase. They don't really know when, but they're expecting by the end of the year. It is all based on what's happening with inflation. The European Central Bank's target for European inflation is 2%, and it's currently just at 3%. So they're trying to make sure it doesn't go out of control. Obviously, the oil prices is having a significant impact, and if the war in Iran hadn't happened, this isn't likely. The rate wouldn't have gone up at the start of the year. They were expecting the rates would remain the same or potentially even a reduction. So this is the effect really of the war in Iran. So what does it mean, or what impact should it have? Well, if you're if you were basically if you're on a variable rate right now, right, there may well have been a good reason for it. There may well be you want to have the ability to overpay, or you're expecting some funds that you want to um, basically clear some of the mortgage off, and you don't want any penalties to do that. Um, it's still worthy looking at. Maybe you switch your mortgage, take a portion on the variable rate, and fix some of the rest of the mortgage. That would be one way to sort of get the best of both worlds, lock in rate security, but also have a flexibility. Some banks are better at being able to overpay than others. So again, if that's the reason you were on a variable rate, um, then certainly worthy of considering that, because if rates are going to go up a little bit, well, um, why stay variable if that's what the expectation is, unless there's a very, very good reason. Okay. Now, when if you're buying a house, ultimately, and I say this a lot, it's always about the rates that are available when you come to close. So if you're buying a new house, the rate, like, you might fix it today if you're closing today, but if your house wasn't going to be ready for 6 to 9 months time, well, we might have reached the top of the cycle at that stage, and the expectation then will be the rates are going to come back down. So I would say, depending on when your house is going to be ready, will be the determining factor as to what way you would go. If you still think if there's still expectations that rates are going to go up, well then you might take a fixed rate. But if it's kind of a rates to go up with a view to they come down, you might take a short-term fixed rate. Or if you feel they've reached the top, then you might take the variable, and then as they start coming down, fix it at that point. So there are obviously things to be considered. The people who are probably need to give consideration to is the people who are fixed rates are about to come to an end. They now are at the point whereby as things stand, the banks haven't increased their rates, but it becomes a race against time to a point, because the rates haven't gone up by the banks, but that's what's likely to happen. We just can't say when. If your mortgage is due up now or in the next couple of months, if you get a loan offer issued on the current rate, you may get a period of grace where they'll close on that rate before they would go on to the other one. So anyone considering getting out of their mortgage soon, its speed is going to be important, because and also say you think your rates aren't up till later in the year, there might be value in exploring what the penalty would be to get out of the mortgage now. Because if it's small, well then there may well be value in that. So as I said, for anyone that's concerned about the rates or what impact or what view they should be taking, just reach out, drop me a mail, and we can tease this out in more detail. So I haven't really going to go into much else. I just wanted to discuss the interest rates today. In theory, just it should have some impact on the price of houses. It should reduce the demand to a little bit, but I certainly still don't see house prices falling. I would see again maybe a little bit of the heat coming out of the market, and maybe the prices won't go up by as much. But that would be my take on it. So for all those, anyone, as I said, any questions, just drop me a mail. And otherwise, enjoy the World Cup, go Brazil, and or Spain. Anyway, till the next time, bye for now.